The Indian rupee has plunged to its lowest level ever, sending shockwaves through currency markets and triggering fresh concerns about inflation, capital outflows, and financial stability. In early trading, the rupee breached a historic low against the US dollar, marking a major psychological break in raising fears that the currency slide may be far from over. Traders describe the move as relentless, with heavy dollar demand overwhelming attempts to stabilize the market. This is not just a currency headline, it's an economic warning signal. Why the rupee is collapsing? Analysts point to a dangerous mix of pressures hitting the rupee all at once. Strong US dollar as global rates stay higher for longer. Rising crude oil prices pushing up India's import bill. Foreign investors pulling money out of emerging markets. Global risk-off sentiment triggered by bond market stress. Growing concerns over fiscal deficits and inflation. The result: sustained selling pressure with very few buyers stepping in. Currency strategists warn that once a currency breaks historic lows, confidence becomes the biggest casualty. Importers rush to hedge, speculators push harder, and central banks are forced into defensive mode. Why this is bad news for the economy? A weaker rupee has immediate consequences. Imported inflation spikes, fuel, food, electronics, and raw materials become more expensive. Pressure on consumers as prices rise across the board, higher costs for businesses. Squeezing margins, increased burden on government finances, risk of tighter monetary policy, even as growth slows. Economists warn that if the rupee continues to slide, the central bank may be forced to intervene aggressively or even tighten policy, a move that could slow economic momentum. Global context makes it worse. This currency crash is unfolding at a time when global markets are already under stress. Bond yields are surging worldwide. Capital is flowing back to the US. Emerging market currencies are under pressure. Risk appetite is collapsing. In that environment, the rupee is particularly vulnerable. Some analysts are now warning that the rupee's fall could be part of a broader emerging market currency shock, especially if global liquidity tightens further. What happens next? Markets are now watching closely for central bank intervention in the FX market, emergency policy signals, moves in crude oil prices, foreign fund flows, global bond and dollar trends. If these pressures don't ease, traders warn that new lows could come faster than expected. Bottom line, the rupee hitting an all-time low is not just another data point. It is a red alert moment for policymakers, investors, and households. Currency weakness, inflation pressure, and global financial stress are converging, and the next moves could define the economic outlook for months ahead. This is a developing story.